Good afternoon. This is Clark Neighbors with the market commentary for the week ending August 31st, 2018, which actually would be the final day of the 2017-2018 crop year. So going forward and looking at the market over the last 30 days will be kind of the focus on this little segment. So for the week, corn up 3 cents. Beans down a dime, wheat up 10 cents. So some upticks in the feed grains and the wheat market this week. Some profit taking it'll look like here on Friday. Keep in mind most of the short positions that have been in place the last 30 days were profitable. We might have saw some profit taking on those going into the long weekend. Because for the month of August, corn still down 20 cents, beans down 75, and wheat down 30. For what it's worth, the livestock markets were fairly flat, and as well advertised, the stock market over the last 30 days continues to work itself higher, and we've seen new all-time highs in most of the stock indices this week. So going forward, we got harvest right around the corner. In some areas it'll probably be showing up next week depending on weather. So supply is still front and center in the marketing side of this trade. So we've seen several private estimates here of late, and on September 12th we'll get an update from the USDA on those production numbers. And when you look at carries in the market right now, both corn and beans fairly wide, especially soybeans
basically at or near record carries on this bean market. I mean, in the front part of the market, the Nov March, you're something north of 80% of full carry, which is pretty rare territory in these spreads, but they're there for a reason, because of the potential of the supply. Keep in mind the carry out currently is big, 700 plus. If from a supply standpoint we see that yield go up like some of the private estimates have been estimating so far, that carryout could approach 900 million or more, which would be new all-time high carryouts, plus also getting stocks to use above 20%. And you got to go back a long time in the bean market to see stocks to use that big. So from a bean perspective, that's putting big carries in the market to try to hold these bushels off the market. It's also creating really wide paces, assuming going into the new crop, which basically starts next week. Many parts of the Midwest are going to be at or near, in some cases, $1 under November futures, in some areas even well over $1 under, depending on what part of the Midwest. So with the crop coming in and the huge carries in the market, you're looking at basis levels versus the next July of 19, well over $1.50 under. So the market signal to producers, to country elevators, etc., is to continue to hold beans off the market. On the same note, very good carries in the corn, not to the extent from a percentage that we're seeing on the beans. Basis levels on corn, though, may not be quite, they're weak, but not at record levels, weak as we approach harvest. And a lot of that may have to do with a demand story in the corn that's at this point much better than the beans. Good export potential, good domestic demand. The ethanol industry continues to crush at a very strong pace. Throw those together, I think from a demand perspective, you got a story to tell in the corn market. But here again, at this point, the focus will be on supply for the next few weeks till we get into harvest and definitely get by the September crop report, which is on the 12th. Again, mentioning basis, that is going to be key going forward to see how much movement we see at harvest time. Logistics, space, is there going to need to be some bushels moved just for concerns on logistics and space. And the other thing to have in the back of your mind that's starting to catch a little more traction is the African swine flu that's occurring in China.
this point. It doesn't seem to be contained. So that's going to be important to see if that continues to spread. That could have some volatility both in the hog market and also the meal and or some of the other feed products that go into that hog. I mean, keep in mind, roughly 1/2 of all the hogs in the world are grown in China, so that's a big situation if it were to get out of hand. So that bears watching going down the road. It looks like right now the focus next week as we go post Labor Day, rains look to be fairly common throughout a lot of the Midwest over the next week or so, especially in the northern part. Draw a line from Kansas City to Chicago, something like that. North of that line is looking at heavy rains over this time frame. That may have some support now on the markets as we try to get progressing with harvest. Wheat exports is a story that has brought the wheat market back here late this week. This story has been in the news off and on the last several weeks, but the talk is Russia could put some sort of limitation on wheat exports. The talk is 25 million metric ton, and some of the trade believe there could be an announcement on that come Monday, which we do not trade again until Monday night. So that story could have some impact on the wheat market and or the feed grains early next week. And then the last thing, as I mentioned, is the next USDA supply and demand and production estimate, which comes out the 12th of September. And then at the end of September, we will also have a quarterly stocks report, which would show basically the stocks as of September 1 at the end of the crop year. So if you have any questions on any of these markets, feel free to give us a call. BIS Commodities, phone number is 800-373-2525. And with that, everyone have a very nice Labor Day weekend.